Good day. This is the continuation of our discussions about construction contracts that are based from IFRS 15, revenue from contracts with customers. Still, we're going to utilize the same source. And if you can recall, if you have watched the first part of this series, you have already, or we have already tackled from the beginning introduction up to this point, the input methods. Remember, there are two methods for measuring progress. And then this single method shall be used consistently for each PO as satisfied over time and shall remeasure its progress at the end of each reporting period. So we said that the computations shall be cumulative, meaning it should be combinations of values at a certain point in time, meaning these are as of or to date balances. And also we are going to compute them prospectively, meaning to say in current and future periods. So we have to make use of the current values. And then we said that there are two methods of measuring progress. We have the output and input. Then we started with input methods on which the basis would be efforts or inputs expended relative to the total. So in that case, you will get the fraction of it or the percentage. So the numerator would be what was the effort or what were the efforts or inputs respectively expended to date over the total expected inputs to be used. Then we said that resources could be there, could be cost, could be resources, could be labor hours, machine hours, and time elapsed. And the first one is the most common application of the input methods, which is the cost to cost. So for cost to cost, from the word itself, meaning to say the percentage is to be computed based on cost as numerator divided by the total cost as denominator. But the question would be, what would be on the numerator? The numerator would be the percentage of completion as computed would be the numerator again is total costs incurred to date. Or we would be saying that these are the actual costs incurred to date. Whenever we see the phrase to date, that means that this is a cumulative value, meaning combination of values from prior year or years and the current year. So that's why we said cumulative cost as defined here from inception up to the end of the current reporting period, divided by the estimated total contract cost. So this would be the total cost incurred to date plus the costs that are estimated to complete the contract or project as expected. And then we have to do the estimation at the end of the current reporting period. So example, there are 10 years for the completion of the contract, and then we are on the third year. So from first year to third year, if we total the costs, that would be the total cost incurred to date. And from the end of that third year, so meaning beginning of fourth year up to the 10th year, then we have to estimate the cost to complete. So the denominator would be the total cost incurred to date from first year to third year and the estimated cost from fourth year up to the 10th year. So that would be the denominator. And that's why for the variation, that was the formula that I was talking about a while ago. So we can, of course, manipulate this formula. So it's possible that certain values are missing and given. So example would be like the estimated cost to complete would be missing and we are given the percentage of completion and the total cost incurred to date. And we can do let X for that. So that is a matter of mathematics. Now to have the examples using input method, so we have here a certain problem of ABC Construction Company. And then here are the details. So we have the contract price. So in the absence of any provision, we assume that the contract price equals transaction price at 6 million pesos. Then the estimated total contract cost is 4 million. So this is at the beginning of the project, which would change over time. We do, by the way, the calculation of this one, the percentage of completion at the end of the reporting period, because that's the time that we have to compute the estimated or expected gross profit for the contract. So, of course, we will be computing the revenue, and the difference between the revenue and the expenses or cost would be the gross profit. Anyhow, to continue, so we have the actual cost incurred in 20x1 at 1.2 M. And the question is, how much is the revenue, or how much revenue is recognized in 20x1? So in this particular case, remember, we are given the estimated total contract cost here. So if there are no changes along the way, so this would be the denominator and this would be the numerator. Anyway, to proceed, so to solve the problem, of course, if this is the real life, we have to apply the steps under the new revenue recognition model from steps 1 to 5. But then, because it is clear this is a construction contract and so on, and if we are given this question, so we can compute actually immediately. So for step 1, this is a construction contract again, and then this is for a specific asset, which is a building. Step 2, what is the performance obligation, or what are the obligations in the contract? The PO is clearly the construction, or to construct a building for the customer. And then why is this satisfied over time? So remember these two requirements, that the entity's performance creates or enhances an asset. For example, work in progress, that the customer controls as the asset is created or enhanced. So meaning to say, this is for the customer. And then for letter B, that the asset created would not be making alternative use to the entity. So what was this for initially? This is the building to be used for the operation, so no alternative use. And the entity has an enforceable right to payment, meaning the seller has an enforceable right to payment for performance completed to date. All right. And by the way, B is the entity here is the seller. So the seller's performance does not create an asset with an alternative use to the seller or to the entity. Because of course, we can say that the customer has something in mind, has the use, but on the part of the seller, this is really for the customer, not for any other uses or usage. Perhaps I haven't emphasized that in the previous discussion, despite the length of 14-minute plus. Then step 3 is the transaction price. As said, contract price is 6 million pesos. Then we have to allocate the 6 million plus on the performance obligations. Fortunately, there's only one, which is the construction of buildings. So meaning to say, we just have to apply this entire 6 million to that. And then recognize revenue as the performance obligation is satisfied. So because we have satisfied these two requirements or reasons, therefore we have to use overtime, and overtime will be utilizing the measure of progress, which is the percentage of completion. Then in this case, it is cost to cost method. So as what I've said a while ago, no change in the end of 20x1. So simply use the 4 million and we get 30%. Therefore, the revenue is contract price times percentage of completion, and that is 1,800,000. So this is the so-called construction revenue, not yet the gross profit, because you will know later on that if you deduct 1,800,000 with 1.2 M, the 600,000 difference is the gross profit for this year. So that will be discussed in the computational tables. All right, so hopefully that is clear. Next, illustration 2, input method estimated cost to complete is added. So 6 million contract price, actual cost 1.2 and 2.8 for estimated cost to complete. Take note that this is the first year, so the actual cost incurred in the first year would be equal to the to-date costs. But for the next years, like the second year, for example, the numerator should be the actual cost incurred or total cost incurred in 20x1, first year, and also 20x2. So 1.2M divided by 4M is still 30% and same revenue. Next, what about for this illustration 3, wherein we are asked of the following questions. Percentage of completion, all right? So we are also given the following items. Take note, these are total costs incurred to date. And we can notice that the values increased over time, because sometimes it wouldn't be clear here, like there's no such word as to date or cumulative. So that's why we are just going to look into the given values, because we will know that, oh, they are increasing or in an increasing trend. Otherwise, if you can see that there are variations, like this would be the cost and then later on it would decrease, so meaning that is the case of the cost not really cumulative or to date. So meaning we have to add them. So add the cost to get the cost incurred to date. So here are the requirements. And of course, we have known this formula wherein the total of the two at the bottom will be the estimated costs for the project, or total estimated costs to complete, which is quite tricky because we have here estimated costs to complete. And if we just attach the word total, that would change the meaning. Let's go back to the formula. So estimated total contract cost. So some books would be using total estimated cost to complete, which is similar to this one. If we remove the total, that would change the meaning. It is estimated cost to complete. Anyhow, so let's proceed. We have here for requirement A, so that would be 400,000. And then this is estimated cost to complete. So we add 2, that's 2 million. So 400,000 divided by 2 million, that's 20%. That's for A. For letter B, we have here to date. So it's clear that the numerator, well, the denominator would be the sum of the two. We can also notice that the estimated cost to complete actually have, or we can say that they have varying or fluctuating values, because again, at the end, for example, first year, this is the total cost that we estimate to complete the project at 1.6 M. But for 20x2, we assume that this is the cost we estimate or project that this would be the cost to complete the project. So that's why to compute, that would be 1,500,000 divided by 1,875,000, and we get 80%. What about for requirement C, percentage completed in 20x2? So the question here is that it is somehow close to B, but the point of letter C is that what was really the work done in 20x2? So take note that the computations here of percentages of completion, as what I've said, would be cumulative in nature. So the total of 20x1 and 20x2. Therefore, should we like to know how much really was the work done in 20x2, then that would just be the difference of 80% and 20%, and that is 60%. All right. And also for 20x1, how much really was the work done? That is just equal to A, because prior year is 0%. So that is 20%. And hopefully that is clear. Then, oh, I guess there are some pages missing, or could be 17, this is 18. All right, so to continue, what if, for example, we are going to make use of efforts expended? So if we say efforts expended, meaning, let's say the number of hours or labor hours used in the construction, machine hours, among other factors. So meaning to say the efforts that are utilized for the construction or completion of the construction contract. So example of this would be, again, the direct labor hours as commonly used by general contractors whose profits are directly related on how they manage subcontractors rather than from the value of the subcontracts themselves, or rather from the costs. They actually have noticed the relationship of the profits to the number of labor hours expended. So to simplify the formula, so instead of using the costs, then we are just going to make use of the labor hours. All right, so here is an example. We have for 20x1, these are the given. So take note to date and to complete. So we can also say here, and we can really see on the illustration that by saying actual cost incurred to date, the phrase actually connotes cumulative. However, for the estimated cost to complete or estimated efforts expended to complete, that is not actually cumulative based on the past. It would be cumulative of the future. So this is cumulative of the past. This is cumulative of what is to come for the company. Requirement: compute the percentages of completion for 20x1 and 20x2. So similarly with the previous problem, that would just be 400 and then divided by the sum of the two, that is 2000, and that is 20%. For 20x2, this is to date. If this is not to date, we should have added the 2, but this is to date, so 1,500 divided by the sum of the 2, which is 1,875 to get 80%. And if you have the question a while ago that is the same for letter C, the work done or percentage completed on 20x2, that's 60%. And the work done for 20x1 is 20% because this was the first year. So the percentage of completion is equal to the percentage of work done for the first year. All right, so those are the problems discussing for percentage of completion. After that, we have the contract costs. The contract costs would include the following items. First is incremental costs of obtaining a contract and the cost to fulfill a contract. So if we say incremental cost of obtaining a So incremental cost would mean that these are the costs that are incurred because of the contract itself. So if the company did not enter into this construction contract, then the company here is the customer, would not have incurred the said costs. So that's why if the costs are directly attributable to the contract, then such would be capitalized as cost of such. So such costs are recognized as asset if the entity expects to recover them. Here, the entity is the seller again, because of course, on the part of the buyer or customer, this is going to be asset or an asset. So for example, a building, if there is already a transfer of such particular asset. So initially on the part of the seller, it will be recognized as construction in progress. You will know that account later on, which is an asset account. And once the contract has been finished and the project has been completed, so the asset should be turned over to the customer. So that's why the construction of the asset, in which the appropriate account is construction in progress or CIP as an acronym, that will be closed. So it will be placed on the credit side. And then, of course, that would be, for example, replaced with a certain account, which is the building, let's say, for example. So that's how it goes. For example, if there is such situation. Otherwise, if the costs are not directly attributable to the constructed asset and they are not explicitly chargeable to the client, then they are to be expensed immediately. Because anyway, the customer are or customers is or are not bound to pay for the said costs. Then as a practical expedient, if the incremental costs of obtaining a contract are going to have an amortization period of an asset as 1 year or less, then such should be expensed immediately. So this is in accordance to PFRS 15, which we have already tackled in the previous sessions or in the previous occasions that we've had. So highlight on the second one again that although the costs are incremental, however, the costs are not explicitly chargeable to the customer, so they have to be expensed immediately. Because again, the entity cannot recover them in any manner. So in fact, we'll know later on that some costs are initially or presumably treated as expenses. However, if they are reimbursable by the customer or customers, then such would be treated as part of the incremental costs. Anyhow, so continuation would be cost to fulfill a contract. Now, these costs actually are mentioned in IFRS 15 on the latter part, especially on the summary, and then they actually are to be capitalized as costs of any asset. Now, we have to follow the rules though for certain costs incurred for the fulfillment of a contract or for the construction or for the acquisition of these assets. For example, inventories are to be acquired, PPE and intangible assets are to be made or constructed, or even PPE just to be bought or intangible assets to be bought. Then we have to follow the specific provisions of these specific standards for them. Then if ever we have some costs that are in relation to certain contracts which are not governed by any specific standards, then we have to follow the provisions, for example, of PFRS 15. So anyway, the point or basic point is that whatever asset that would be, the basic rules would be the same. That if they are directly attributable to the contract or to the asset, in that the asset would not be complete, the asset would not be in a way or a form that is intended by the management for its use, then such would not be capitalized. So if they are, then they have to be capitalized. All right, so basic rules are to be followed. So if these requirements are met, so we follow PFRS 15 if they're outside the scope of these standards. Then if ever we talk about construction contracts, normally these are the costs incurred. So the supplies or materials used in the construction, the labor costs to be incurred, then other contract costs that are needed. Then if you can notice with the costs here in letter D, these are actually the costs that could be or can be added to the costs for the construction contract. So these are the costs which are, again, because they are directly related for the asset to be ready for its intended use or for the purpose, and they are explicitly chargeable to the customer. Then for letter E, these are the costs allocated. So these could be fixed costs, for example, or common costs that are incurred for or of the company as a whole, and they will be allocated to the various aspects of the company. And one of that would be, for example, for the construction of the assets. On another hand, these would be the expenses that would be expensed as incurred because they wouldn't add more benefits for the construction of assets. Also because they do not directly correlate or they are not directly related as what we would say for the construction of the asset. So they do not contribute really directly for the construction contract to be finished or completed. So one example of that, let's say general administration costs. Of course, these costs, for example, would be incurred prior or could also be incurred during the construction. However, although they are connected in a way, but reimbursement is not specified in the contract, therefore it should be expensed immediately. However, if this is reimbursable, so this is connected to the contract, this can be also added or included as part of incremental costs. However, wasted materials, labor, or other resources, they are to be expensed. Selling costs, research and development, then depreciation, for example, of idle plant and equipment that is not used in a particular contract. We can actually summarize this as saying that if they do not relate correctly, I mean, they do not correlate or relate directly to the contract, then because they are not going to contribute to the completion of the contract, therefore they should be expensed immediately. Then also costs that relate to past performance or performances that are not connected anymore for the current construction of the asset. Then costs for which an entity cannot distinguish whether the costs relate to unsatisfied performance obligations or to satisfied or partially satisfied performance obligations. So it's not clear as to which do they belong to. So that's why, in addition, we have to deduct any incidental income that would be incurred or that would be there in the construction contract. So example of that, if, for example, there would be certain scrap materials or excess materials that can be sold. So these are materials that are not, let's say, forming parts of the finished product and they're just there in excess. They will never be used, but they can be sold for lesser values or amounts. So these are the scrap materials. And then, which means that any income or gain earned will have to be deducted from the total contract costs, including also, for example, if there will be equipment utilized specifically for the construction contract and it can be sold also for a certain value at the end. So this expected amount shall be deducted from the contract costs. After that, we have the following illustration. So this is a case of ABC Construction Company using cost-to-cost method. The price contract is fixed. Total contract cost is 10 million pesos, and these are the actual costs incurred by ABC during the first year of the construction. So here are the following items. Then the requirement is to compute for the percentage of completion of the contract as of the end of the first year. So to do this, of course, we just have to determine first the actual cost incurred to date, which would be the total of the applicable costs from this list. And then we divide that by the estimated total contract cost as given, which is 10 million pesos. So the total cost incurred to date would be the following items. So for the first part, this would be expensed or charged immediately, simply because this is prior to the perfection of the contract. So this again does not contribute for the sole purpose or for the main purpose of making the asset ready for its intended use. So that's why this is an X mark. And anyway, there's also an item here which states charged immediately as expense. Then take note that these are the costs that are actually used for the construction of the asset. So 3 million pesos purchase would be X because they are not yet used in the construction. Site labor is check, site supervision, depreciation of equipment used, check for the construction, not used, X. Idle, by the way, means excess or let's say not utilized or not used construction equipment. So that's an X mark. Costs of moving plant, equipment, and materials to and from the contract site. So this one will have to be included. Then cost of hiring plant and equipment would also be included for a total of 4,500,000. So this would be the total cost incurred to date, divided by the 10 million using this formula from a while ago. So we get 45%. Okay, so that is for illustration 1. Next, illustration 2 These are again the contract costs with additional items. And the question is compute the percentage of completion. Okay, so these are the estimated total contract costs. So this would be our, let's check, our basis for the denominator, but the numerator will also be analyzed properly. Forgive me guys for going back and forth. It's just to check our direction. So for this one, we have to analyze like which of these items will have to be included for our analysis. So here we go. For all items here, we will not include estimated marketing costs for selling condominium units. So let's check all items here. Let's find a way so that everything will be seen. All right. So all costs are here. This is a check, cost of design, then allocated for the cost of design and technical assistance. That's a check. Cost of materials to be used in construction, yes. Construction labor, rectification or rectification rather, and guarantee work, including expected warranty costs, so included. Administrative costs expected to be reimbursed. So this is a reimbursable type of estimated administrative costs. So they have to be included for the purpose or computation of percentage of completion. Then insurance, yes. Construction overheads, yes also. So marketing costs will have to be excluded so that the denominator would be 10 million pesos. On the other hand, for the numerator, so similar items are found from prior group to this group. So this is a yes, yes, then yes, yes also, yes. Not expected to be reimbursed, that's an X. Reimbursement is not specified, X. Insurance costs, yes. Overheads, yes. For construction, marketing, X. So that we get 5 million pesos. So we now simplify with our formula, percentage of completion. So 5 million total incurred costs or costs incurred to date divided by estimated total contract cost. So that is equivalent to 50%. Next, what if there will be adjustments to the measure of progress under the input method? So it's possible that, let's say, there are certain items on total contract costs and the total cost incurred to date, just like what we have a while ago, that they have to be removed to our computation. So here are the following circumstances in which our costs will have to be adjusted, either the numerator or denominator or both. So when a cost incurred does not contribute to an entity's progress in satisfying the performance obligation. So remember we said that only the costs which are directly related to the asset, for example, the constructed asset, that would push through or that will make it complete or that will enable it to reach completion for the purpose intended by the management. So in that case, they have to be included. So example, let's say the cost of significant inefficiencies such as wasted materials, labor, and other resources that were not reflected in the contract price. Because of course, if the wasted items do not actually result because of matters beyond the control. So meaning these are matters that resulted because of the inefficiencies done by the management of the construction company. So it is but unfair if we will charge this to our customer. It is okay. There would be normal waste tests or there would be normal cases that there would be some mishaps or there would be some errors committed on the construction, but they should be normal. Otherwise, if abnormal, then they should not form part of the costs of our construction. Then, or costs for the construction of the asset. Some would say construction costs to simplify, or contract costs. Then letter B, it is not proportionate to the entity's progress. So some costs again, will have to be excluded because aside from they are not contributing to the progress, then they are not also proportional to it. Examples here are written, so they are excluded because they do not actually contribute as A, and then they are not also proportionate to the progress. I kept on saying the two items because they have to be emphasized for the exclusions. For number one, example, advance payments to subcontractors for which the subcontracted work has not yet been started. So it's not aligned. The payment was made, but the work was not yet done. Therefore, this has to be excluded. For the second one, some materials are delivered on the contract side, being bought for the usage for the construction, but then they are not yet installed, used, or applied. So take note, only the cost of materials that are actually used for the construction shall be capitalized. Then in that case, we have to adjust, for example, using the input method, cost to cost, or efforts expended method like the direct labor hours, the impact of the cost, for example, or the hours consumed for those items as mentioned above, that would change the percentage of completion because they have changed also, again, either numerator or denominator or both. So here are the cases though that there would be adjustments if the four of them are satisfied. So here are the following items. The good is not distinct. So the customer is expected to obtain control of the good significantly before receiving services related to the good. Then the cost of the transferred good is significant relative to the total expected cost to complete or completely satisfy the performance obligation, and the entity procures the good from a third party and is not significantly involved in designing and manufacturing the good, but the entity is acting as a principal. So in this case, there has to be made some adjustments just for the sake of computing the percentage of completion, but then overall, they will still be included for the computation of the revenue and cost. So we will see that on the subsequent examples as to what I meant, that they will be excluded for the purposes of computing the percentages of completion, but they will be added back to be able to get the revenues and costs. Example, let's say we have the following contract in which the total consideration is 12 million pesos, and then here are the expected contract costs. So we have from generator and other costs, and this is the total. So we have a total of 9 million pesos. Then here are the additional information. So we have cost to cost method as applied. Total cost is 6 million in 20x1, including the cost of the generator. This is, by the way, the total or expected total contract costs for the entire duration of the contract. What is quite unique with the examples here so far is that the time is not shown. When I said the time, the contract period. Anyhow, let's proceed. So to continue, the customer obtains control of the generator when it is delivered to the site in December 20x1. However, the generator will not be installed until March 20x2. So in that case, we have here that particular condition that the customer is expected to obtain control of the good significantly before receiving services related to the good. So that is also very important. Then another one is ABC company regards the cost of the generator as significant in relation to the expected total contract cost. So this is number 3. Then for number 1, the good is not distinct because it is part of the total contract costs. Number 3, significant, we can see this on the percentage as computed. That is 4 million divided by 9 million is 44.44%. Then although ABC Company acted as a principal in procuring the generator, ABC Company is not involved in designing or manufacturing the generator. So somewhat these are standard provisions that we have to know as to whether adjustments are to be made. So hopefully I'm still clear. How much revenue is recognized in 20x1? To compute, we have to analyze first that the costs that we have, like the 6 million, included the cost of an uninstalled material, that is the generator. So we have met the conditions above. Take note, all of them shall be met. Otherwise, we are not allowed to exclude the said cost for the purposes of computing the percentage of completion. So we have to exclude from both numerator and denominator, and then excluded from both the transaction price and the expected total contract cost when applying the percentage of completion. So for the percentage of completion, we have deducted 4 million from the numerator and denominator, thereby getting 2 million divided by 5 million and 40% as percentage of completion. And you can notice here, when we computed revenue and profit, so you can see that the total contract price is 12 million, and then the cost is at 4 million. And we get the 8 million here. So the cost of generator here, remember this is the total expected costs to be incurred in the contract, which was 9 million, but we X'd this one. We did not include this, so that's why we will have to deduct here 9 minus the cost of generator is how much? That was 4 million, right? So 4 million. So 12 minus 4, that's 8 million. We have to exclude that so that we get 8 million, and then we multiply by percentage of completion at 40%. So we get the total 3.2 M. And then we add back the cost of generator, so we get 7.2 M or 7,200,000 for our revenue. And then for the profit, that is our 9 million. First, we have to get the cost, rather the cost of goods sold, or let's just say the contract costs. So 9 million deducted by the cost of generator. We can notice here that there are adjustments on both the revenue and the cost. So 5 million cost times 40%, we get 2 million, and we add back the 4 millions. In other words, the 4 million was not included so as not to alter the value of the revenue and costs that will be affected by the percentages of completion as applicable. So 2 million plus 4 million, that is 6 million. And then the revenue is 7,200,000 less 6 million cost of goods sold, so that the profit will be 1,200,000. So this will be the gross profit. This is not yet the net income, because take note, what has been deducted is the cost of goods sold, or was the cost of goods sold, which would be the contract costs. Anyways, hopefully that is clear. Next, for illustration 2, adjustments to the input method. So as what we've said, again, only the costs related to construction that are actually incurred shall be included. So that's why here, as explained, the conditions listed above from numbers 1 to 4 are not met. Therefore, we are going to adjust the measure of progress by simply eliminating those costs. Okay, so let's check what are the given items. So we have here the total cost of 6 million, and then there are items 2 million advance payment to a subcontractor, which is not yet started, and then this is not clear, but it is 200,000 based on the given 200,000 cost of materials not yet installed. We have to take note, as this particular information has said, that ABC company does not regard the cost of the unused materials as significant in relation to the expected total contract costs. So in that case, that's not, or that does not satisfy actually number 2 requirement, so that we are going to adjust the percentage of completion, numerator and denominator, and we will be adjusting the computation of revenue and cost respectively. Then, meaning we're not going to apply illustration 1 steps. Then, moreover, ABC company retains control over the unused materials because it can use them in a contract with another customer. So this is not a case wherein the customer will have the control. We have to go back to those parts just to emphasize. So this one that the customer is expected to obtain control of the good significantly before receiving services related to the good. So in that case, it's clear from the problem that it is not the case. It is the construction company that would retain the control. So for the purposes of computing percentage of completion, simply exclude the 2 on the numerator, while on the denominator, let's check the 10 million is the estimated total contract cost. All right, so we simply have to exclude so that the percentage of completion is at 38%. Although some would be asking like, why we did not deduct these two costs at the bottom figure, wherein in computing 10 million pesos, probably the total cost for the incurred costs or actual incurred costs to date actually included the 2 million pesos advance payment and the 200,000 cost of materials not yet installed. So that could be one question. Anyhow, well, in the problem, it has been stated that this is the estimated total contract cost. So that's why we just have to put it on the denominator and we get 38%. All right. So that's it for our second part, which discussed about the cost to cost method and as well as the percentages of completion and some adjustments to the percentage of completion, especially to the input factors and expanded efforts method under the inputs method. All right. So stay tuned for the next topic or part or next session for our accounting for special transactions, especially for construction contracts. Thank you and God bless.